Welcome back inside our proactive newsroom. And joining me now is Anthony Ginsberg. He is the CEO of GinsGlobal Index Fund, of course, with the Tech Megatrend ETF. And Anthony, great to see you again. How are you?
Thanks, Steve. Great to be with you.
Yeah, just before we get into sort of a bit of meat here that we're going to talk about, maybe just remind everyone a little bit about the Tech Megatrend ETF.
Sure, we actually have 10 sub-themes, Steve. And we just recently added defense technology and quantum computing, but we cover the whole gambit from cloud computing through social media. And obviously, we've got things like digital entertainment, blockchain as well. In fact, blockchain has been our outstanding performer for the year. As a theme, it's been up over 50%, followed by things like digital entertainment, cloud computing. Interesting, another one, gene editing. We don't talk too much about genomics. Has also been up in the high teens, along with cybersecurity up almost 20% as a theme.
Yeah, is the gene ones that surprise you? Because it's interesting. You're right. We don't talk a lot about that, but I imagine from what you're telling us, it's a pretty thriving industry.
It is. I think what's actually driving a lot of these is the convergence across tech. And actually, the AI boom that we talk about, we don't see it as a bubble at all. We see it as the early stages in the early innings of the game here. And actually, AI is driving more R&D in the biotech and genomics space. Things like CRISPR can actually be created faster, new pharmaceutical drugs. So we actually think AI is a boon for the biotech and genomics space too. I would just say that there are a couple of tailwinds that are already driving these tech converging themes. One is, for example, lower inflation, the fact that the Fed has cut rates already this year. We're expecting another rate cut next week, possibly another one in January. This all helps growth stocks, including genomics and gene editing, things like cloud, cybersecurity as well. I would just say the convergence also of these themes across different mergers. We're seeing that because of the Trump-friendly business policies, more Federal Trade Commission mergers are being allowed. The SEC is being more user-friendly as well. We just saw a big deal today with Netflix taking over Warner Brothers. So this whole convergence continues to play out, and we don't have the case where some years ago tech M&A was basically dead. So I think that's one of the other big tailwinds, Steve. And lastly, the weaker dollar is boosting earnings. So we're seeing earnings growth in the tech space of mid to high teens, around 15, 16% year on year. So all of that is a helpful tailwind. And again, Fed rate cuts later this year again will be another boost.
Yeah, you mentioned the Netflix deal. There's a lot of talk about that online, specifically because the way digital media is moving and the way it's going forward. You obviously are sensing that it's going to continue to be strong, but also that it also indicated that some legacy media as well, like they're still planning on having Warner Brothers films in theaters and things like that. So it's trying to drag what has been a drag up as it goes along.
Yes, it really is a global play. I mean, we actually have this global benchmark for tech megatrends. We see the Asian per capita usage of cloud, digital entertainment being far greater actually than in North America or even in Europe. So a lot of this, when you look at Netflix, the play on Warner Brothers, it's really a global story. Interestingly enough, the PE ratios for the mid and small cap holdings that we have 140 holdings, they're much lower. They're around the high teens, low 20s. Unlike something like the NASDAQ or a lot of tech traditional funds are very overweight in the mega caps. We actually see acquisition opportunities in these legacy media areas where the PEs are much, much lower, Steve. So expect more M&A, particularly in the small and mid cap space and also the legacy media areas.
Okay, and lastly, 2026. Obviously, you're wrapping up 2025. As you mentioned, the fund is doing well, and you've got some strong sub themes involved in it. So, what are you looking at for 2026?
Yeah, the gains year to date are around 30%, and we're actually expecting, with the midterms next year, there's continue to be a business-friendly environment. We see AI as infiltrating a number of these other spaces. So things like Netflix and digital entertainment, cybersecurity, cloud. The hyperscalers, the cloud guys, are actually the biggest buyers and users of, AI at this point in time. So it's really driving it, and it's still early stages. So just interestingly, the data centers that get a lot of press are about 90% leased out at this point. So we don't see it as an overspend like some others. And again, it's early innings, but this really is a global story, Steve. So the weaker dollar is certainly helping US earnings. And we expect, again, 15% year on year tech earnings growth.
All right. Well, we look forward to hearing more about that in 2026. Thank you, Anthony. Good to see you. And we look forward to our next conversation. Okay.
Happy holidays. Thanks, Steve.
Yeah, you as well. Anthony Ginsberg, the CEO of the GinsGlobal Index Fund, and of course with the Tech Megatrend ETF.